If you want to become a profitable trader, you only need to spend a few days finding a strategy that will give you more wins and keep your losses to a minimum. An order block candle is one of the few strategies you need to learn about. And in today's video, we are going to discuss all about tradable order blocks in forex trading, crypto, stocks, indices, among others. Hello, welcome to Power of Mindset Yields, where we learn money-making tips and ideas in the financial market trading, affiliate marketing, and content creation. So be sure to subscribe and turn on the notification bell icon to stay tuned for upcoming videos, especially in affiliate marketing and content creation links that I haven't shared here. And okay, let's go. So what's an order block? An order block is the last candle before the strong move that creates an imbalance in the market and must be near or at the support or resistance level. There are two main types of order blocks, and that is a bullish order block and bearish order block. Some call it stack order blocks. A bullish order block is the last candle before the strong move up that creates a strong bullish imbalance and must be near at the support or resistance. And a bearish order block, on the other hand, is the last candle before the strong move down that creates a strong bearish imbalance and must be near or at the support or resistance. So how do you know a valid order block? Well, there are few features of high probability order blocks you need to understand that will show you if the order block is valid or not. Number one, order block should be at or near the support or resistance. Two, order block should be at or near the flip zone. Now a flip zone is when a support becomes a resistance or resistance becomes support. And this setup has a high probability if you spot it on a trend continuation. Three, order block should break market structure after liquidity raid. I already made a video about market structure, so be sure to go and check it out. And this is commonly known as SH plus BM plus RTO, where SH stands for stop hunt or liquidity raid, and break in market structure, which is BMS, break of market structure, then RTO, return to order block. Then the second, last one, which is 4, OB should be at or near
CSR stands for significant
level.
Support and resistant.
The order block number 5 should be below equal lows or above equal highs. Here we wait for manipulation of equal highs or equal lows. Manipulation, I mean the high being taken out or the low being taken out before reversal. For equal highs, check for bearish order block above equal highs. The market will manipulate or break out at this equal high before respecting your bearish order block. And for equal lows, check for bullish order block below equal lows. The market will manipulate or break out these equal lows before respecting your bullish order block. So this setup gives a high probability odds if the equal lows forms at the same level as the flip zone. Alright, we have other two special types of order blocks that you must know, and that's a breaker block and a mitigation block. So what are breaker blocks? When a bullish order block turns into a bearish order block, or a bearish order block turns into a bullish, we call this a breaker block. You can compare this concept to the support turning into resistance. It only uses a different concept but the same principle. So here is an example of a breaker block on a real candlestick chart. Yeah, when price violates the previous order block that had broken structure, it becomes a breaker block. In other words, what was a significant support becomes resistance. Then what's a mitigation block? Mitigation block simply a move failing continue and break structure. Mitigation means reducing risk retracement as a result of hedging. When the market maker moves the price away from a level of strength and magnitude, leaving behind an imbalance, it is assumed that they are enticing retail traders who is me and you to join the move. And because most retail traders are price chasers, they join the ride with their stop loss set. As a result, the market maker will come back to clear those stops. When the stop loss is hit, the retail traders are knocked out of the move, and the market will resume its normal trend. Alright, so in the next video I will backtest all these order blocks. Otherwise, subscribe to this channel, turn on the notification bell icon in order to not to miss out in the next upcoming video. Otherwise, good luck.